Good morning, sir.
Morning.
How are you?
Very good. How are you?
So, how are you looking at the? Deck is set for, budget. So, and I see a lot of action in all the mortgage shares. People are hopeful about housing being used by the government as a big propellant for the economic growth, economy per se. So, do you see any specific mention of it in the budget, and in what respect?
I think there will be some mention on housing. I'm saying on the basis of my belief that the government is trying to push growth, which is so very critical at this moment. Yeah. And housing is an engine for growth.
Sure.
So if you see anywhere in the world, housing starts are taken as a barometer to see how the economy is progressing. Now, in India, we see that there are something like 280 industries, big and small, which depend on the housing sector. So the big ones are cement and steel and paint, and there are small ones, a multitude of these small ones. So by giving a boost to the housing sector, effectively you're giving a boost to the rest of the economy. And the multiplier effect is very, very quick. So with the objective of pushing growth in the economy, pushing investment in the economy, I would hope that there is some benefit that is given for the housing sector.
So you're positive that something will come?
I would hope that is good. Positive, not positive.
Let's see. Just it's a matter of a few hours, and then we'll see.
That's right.
What happens.
That's right.
But I think just your presence and HDFC name is so big in my mind as far as wealth creation goes. And we just seen the numbers which we did. HDFC, just for the viewers to figure out, what is the extent and extent of wealth has been created by HDFC. HDFC took just about 10 crores in 1977 from the public, and today it is 210,000 crores market cap company. It has given birth to the best bank and the largest private sector bank, HDFC, which itself has about same kind of market cap of 2 lakh or
larger than that.
It is little larger than that. So 2,50,000 crores. Yeah, something like that.
Little more than that also.
So the son has become bigger than the father, but HDFC itself has become 2,10,000 crores. I think in the journey they have taken about 5,000-6,000 crores of additional money, which would give a dilution of less than 10%. So even if you look at the 90% of the current market cap being attributable to the 10 crore original shareholders, 10 crore equity subscribers, 10 crore becoming 1,80,000 crores in 37 years. Guess what is the compounding? It's 30% for 37 years. And if you add 2%, actually the yield in 78, 79 was more like 9-10%.
You mean dividend?
Dividend yield. But today, even if you take 2%, that entire number goes to, hold your breath, 29,000 times. So 32% compounded in 37 years is more like 29-30,000 crores kind of thing. And look at the power of dividend. When you talk about dividend policy, people don't like it, but almost 50% of the total gains to the shareholders have happened in this journey by way of dividend, and 50% by way of capital appreciation. So I must congratulate you, your board, and the company itself for what they've done to the shareholders.
Thank you, Raamdeo.
But many people have not made money so far. I think this is a tremendous opportunity, and let's talk about that. What is the kind of, you are a brilliant management and into a brilliant business. So let's discuss, what are the challenges of, to my mind, one of the things is that does the size itself slow down your growth, or is the opportunity so big that actually you are best prepared to encash on the future growth?
I think, Raamdeo, if you look at the opportunity in the housing business first, housing finance business first, it is huge. 3-4 pointers to that. Shortage of housing in India, massive. We all know that. Penetration level of mortgages extremely low. If you look at total outstanding housing loans in the whole country and divide that by the GDP, it comes to 9%. Now you compare that with the Western world. US is 69%, UK is 84%, Denmark is over 100%. But let's forget that. Let's come closer to town. Let's look at Asian countries. China is 17%, India is 9%. So penetration levels are very low. And therefore, over a period of time, that number has to grow. That's one important factor. Second important factor, which according to me is probably the most important factor, is that if you look at the demographics in India, 60% of India's population is below 30 years of age. And unlike the West, in India, what we see is that the average age of a customer when he or she buys the house for the first time or takes a housing loan from us for the first time, his average age is between 35 and 38 years of age. And with 60% of India's population today being below 30 years of age,
they're yet to reach
all these people will need to buy a house over the next 3, 5, 7, 10.
So opportunity is not in doubt.
So the opportunity is absolutely not in doubt.
But do you think because of certain size, see when you are, if you are 5-10,000 crores,
obviously.
So the rate of growth, the biggest anchor is the denominator.
So for years and years we've been meeting investors, and over the years we've told investors that if you take a 5-10 year view, our belief is that about 15 to 20% growth is something that we would see in the loan book, individual loan book, after adding back loans we sold in the last 12 months. The reason being that we don't retain all the loans, we also sell down loans. So when we are calculating our growth numbers, we are adding back loans sold. So I would say that 15-ish, 15 to 18, 15 to 20 number.
That would be the AUM growth for you?
For 15 to 20% growth in the loan book, in the individual loan book.
Yeah. But
which is much more consistent, much more persistent.
Yeah. But the profit growth can be impacted by many more factors.
Profit growth can be impacted by a number of factors. For example, if you look at an individual business, at the time when we do a loan, first time, we are making a provision for standard assets. We are paying commission to agents for getting business for us. That full amount we charge upfront to the P&L account. So in reality, a loan that we do today starts generating profits only 1 year later. And actually for nearly 10 months, the loan actually results in accounting losses. So therefore, accounting profits may or may not be the right way to look at it, at least as far as Indian GAAP is concerned.
But
when we move to IFRS, things may be different.
But as far as the stock market is concerned, we are concerned. जो दिखता है वो बिकता है. So we have to really be bothered about what kind of a percentage here and there is okay, but clearly, is it a company which is likely to grow at 15% or 20% or 25%, because it makes a huge difference in terms of total return. We have seen 2% makes that difference. So I was just trying to figure out, will the cost of capital, we are heading into a very different kind of a liability, cost of liability scenario. I'm talking about a little longer term. So do you see, what are the possibilities you see in this deflationary world and falling inflation here, interest rates falling here?
See, Raamdeo, over the years, if you see, if you take the last 10 years or even more than 10 years, we operate with very, very, very stable spreads. The difference between lending rates and borrowing rates, or difference between what we earn on the assets and what we pay on the liabilities, is typically been between 2.25 and 2.35%. The lowest it has been in the last 10 to 15 years has been 2.20, and the highest has been 2.35.
Where is it now?
It's 2.31.
Okay, so it's a higher.
When I say now, I mean December.
So we are already at the
higher end of that scale.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.